Hello, everybody. Wenga Olatunji here. We are looking at two topics in one today. Still on corporate governance, the board of directors. We want to look at the need for the board committees and audits and corporate governance. The need for audit committees and audits and corporate governance. Super excited that we've been able to cover the ground like this, and we should be rounding up with these two topics today. And this video is going to be two in one. So, what are the names for having board committees? So, we'll be looking at the nature of the board committee. We'll be looking at the main board committees, that is, for the board of directors, there are particular committees that everybody should have as expected. They could have more, but they should not have less than this. So that's the main board committees. Then the reasons for having board committees. Just as I said, we are treating two topics. So immediately we are through with this, we go into audit and corporate governance. So now let us go into the video, and if you are just joining us, and if you've been with us too, go and subscribe. Please, it is important to encourage us, to encourage others to be reached to, and for you to be notified when we release new videos. Please, let everybody go and subscribe to this channel. Thank you. So let us go into the discourse of the day. The business of any audit, of any board committees, actually is representative in nature. The work, the nature of board committee is actually representative in nature. That is to represent the board, to monitor some specific area of business operations. So that means that they are not given the power for decision making, but they are to recommend, having gone through and monitoring that particular aspect of work. So they are to recommend. So the power of decision making is not given, it's not in the nature of the board committee, but they are actually to help in the decision making of the board. So they are representative. They are not the board, but they are part of the board. So the committee cannot become the board, but the committee is a representative of the board. So they are delegates. A committee is not given the decision making power. I've said that. They are not given the decision making power, but they are to represent. And in representing, they must represent skillfully and with care, having fiduciary duty to the board as a whole. So the committee should report back to the main board, and in reporting back, they must recommend necessary recommendation for action to be taken. Now left for the board to decide whether they want to go with the committee's recommendation or not, but the committee must try as much as possible to recommend. So there are some specific board committees that a board should have ordinarily. They could have many committees as occasion demands and as condition and business environment would warrant. But it is expected of any board to have the following. They should have a recommendation committee, remuneration committee rather. They should have an audit committee. They should have a nomination committee. They should have risk management committee. Let me come again. The board should have the following committees. Remuneration committee, they deal with the remuneration of the executive directors and generally the board. Then they should have the audit committee. So the audit committee is to liaise with the external auditor, the internal auditor, ensuring the controls are in place and is working. Report from the internal audits and the like. We are going to go into it in detail, so don't let me be tempted into it. Then they should have a nomination committee that deals with appointment and reappointment, selection of new directors, and they should have as a matter of standard risk management committee that look into the risk aspects of the business, especially the inherent risk. Now we'll say, what are the reasons for having board committees? What are the reasons for having board committees? Basically, there are a lot for the board to handle, and some are so strategic they could not be delegated. Some are so strategic they need in-depth knowledge before decision can be made on them. And to do this, time will be consumed. So therefore, they need to give detailed work to some people, some representative that we call committees, to look into it and report back to the board, to the main board. So this is one critical reason for having the board committees. That is, time consuming detailed work should be delegated to some representatives of the board. And also, there could be conflict of interest. Don't forget that the board composition is made up of so many representatives of stakeholders. And if we are now to handle a particular aspect which concerns primarily a particular segment of stakeholder, so it is important to mitigate against the conflict of interest factor that such people should be isolated so that other people, independent people, should look into the matter. So because of that, independence and conflict of interest to be reduced to the barest minimum, it's better that we have a committee for such an aspect of the organization's operations. So because of these two reasons and many more, board should have committees. So because of these reasons, it's good that the board should have committees to handle such and such. And to examine some details of the reason, like the remuneration committee, is good that they are composed of independent non-executives. You know why? Because they are dealing with the remuneration of the board, especially the executives, that is, those that run and are staff of the organization. So, people that we recommend for maybe promotion of a director, executive director precisely, and remuneration package and the like should be independent so that they will not be biased and they will be able to look at it objectively. So the independent non-executives, the NED, should be in the remuneration committee. Like was when we're talking about an audit committee of the board, NED, especially the independent one, should be part of the audit committee so that they will be able to look at it critically. Don't forget that they are not part of the day-to-day running of the organization, and it's the day-to-day running of the organization that has brought about the financial statements. So those that have produced and work and prepared the financial statement should not be those ones that will be looking or compose the audit committee looking at the integrity of the same financial statements. So audit committee should have independent non-executive members. For the risk committee, their work is to ensure the risky aspects of the business are looked into, especially the inherent risks. What are the inherent risks? They are actually business factors that come with that particular organization's endeavor. Like if somebody want to sell kerosene, maybe you call it another name in your country. It simply means a petroleum product that we use like the cooking gas in the stove and the like. If somebody want to sell such a product, there will be spillage naturally. So spillage is an inherent risk in such a business. So that is what we are talking about. So the risk committee should see into risk aspects of the organization, the management of the risk, the mitigation of the risk, the transference of the risk, and how to generally manage the risk. So they should be monitoring that aspect for the organization. And last but not the least of the main committee that the organization should have, the nomination committee, which deals with the appointment of a new director. So they need to fish out from the society what qualifies somebody to be a director in such an organization, and it should be standardized. They should have a checklist for their work, and when they are fishing out who next will join the team of the board, this and this will be what they will be looking at in that person. So to avoid biases and the like, they should have a list of minimum expectation and criteria for anybody that will join the board. So having found somebody suitable, they make recommendation to the board to appoint or propose for appointment such a person. So these are some of the needs to have audit committee, and it is so critical. We move on to audit and corporate governance. Audit and corporate governance. So when we are talking about audit as a requirement of corporate governance, we are talking about independent review and evaluation of a business financials, and the people that will look at it should equally be objective and independent of the production of such a financial statement. And this committee actually requires knowledge, and the membership of it should compose of people with financial background like accountants, financial analysts, and the like. Not necessarily that all of them should have financial knowledge, but it's critical that at least one or two should have key or major in finance or in accounting to serve as audit committee member. So audit is key requirement in corporate governance, and especially the public interest organization must have audits done statutorily every year and report back to the board and return back to the reporting or regulators and government every year, filing their returns. So we could have internal audit, we could have external audit, but let's talk about external audit now. Statutorily, an organization should have audits of their organization conducted, especially for the public interest organization. And please note, it is not the duty of an auditor to detect fraud. Even though this may be critical to the survival of the organization, but the primary objective of audit engagement is to ensure reliance on financial statements, to express opinion on the accuracy and the integrity of the financial statements. In doing that, errors should be detected, fraud should be detected, but I'm only emphasizing that it's not the primary duty or responsibility of audit engagements to have detected fraud. We now ask, so whose business or whose work, whose responsibility is it to do that? Actually, it's management's responsibility to put control in place and to ensure that it's working effectively. And it's for the auditor to ensure and to validate whether the internal control exists, whether it's working, and if it's working, how effective is it? Is it weak? Is it strong? Is it adequate? And they could equally make recommendation to the organization, but their primary objective is to give and express independent opinion. So internal audits is an aspect of audit too, and when we are talking about internal audits, we'll be talking about a specialist within the system that ensures controls are in place and they are working. So internal auditor could be a staff, and internal auditor could be coming from outside as consultant. That is, internal audit could be outsourced and it could be localized internally within the organizational system. So as a matter of corporate governance, it is important that organizations should have internal audit departments as a matter of good corporate governance best practices. The fact that many companies do so also is a factor, and it indicates that there are significant benefits to be gained from having audit conducted and having internal audits, which seeks to control on daily basis and effectively. So some activities of the internal auditor or internal audit. So some of them are monitoring of the internal control, examination of the financial and operational information. In fact, looking at every aspect and segment of the organization, departmental audits, review of expenses for economy efficiency and effectiveness. These are key and primary to organizations' survival, to organizations' prosperity. Review of compliances to avoid being penalized and paying heavy duty penalty to government. But if an organization should have internal audit localized or outsourced, either way, and they are reviewing their compliances, they have a checklist of what time to submit what report and returns, filing of taxes, filing of VAT, and the like. So this ensures that the organization complies with relevant statutory and mandatory requirements and saves a lot of cost in the process. We've talked about audit committee, but let us look at it now that we are talking about audit in a bit of detail. So it's the responsibility of audit committee to ensure that accounting policies are in place and they are effective, they are adequate, they are working. The scope and planning of external audit, they are to work with the external auditors. Audit committee should work with external auditors and should receive report of the internal audit, examine it, should receive the report of the external auditors, examine it, and review the finding of the management control letter that the internal auditor will give and that the external auditor will give. What are the weaknesses that they've observed and how could they be strengthened? So these are key that the audit committee must work on. The effectiveness of accounting system should be looked at. Authorization, who authorizes what? All these are critical, and it's the work of the audit committee who approves something, who recommend something. What are the processes in place? We must review regularly the effectiveness of internal control system. So these are actually key, and audit committee must deliver this to the organization and many more. I, I could see, and for many of us that are working, we will agree that these are critical areas we are touching when it comes to the corporate governance of an organization, compliance to regulatory, and longevity and survival going concern of organization. So the main committees of every board, at least they should have the audit committee, remuneration committee, remuneration committee, and committee that deals with appointments and recommendation for appointment of new directors. That is the nomination committee. Really, I'm super excited. I want to believe you too will. Having covered all the necessary topics under corporate governance, looking at the board of directors, as you could see, and these are series of videos that we've made available, and you can check them up. The links are there. You can go to the playlist and you are going to see them there. We've dealt with the role of the board, the composition of the board, the role of the chairman, the role of the executive chairman, the role of the non-executive directors. We've examined the directors and the law. Induction of the directors have been treated. Training and performance evaluations. We've dealt now with the need to have board committees, their functions, their responsibilities, the expectation of the organization, the nature of the board committee, and we are rounding up with the audit and corporate governance. We are going to move on to the next topic, We hope you've joined us and you will join us. So please go and subscribe to this channel, James Associates. I want to believe we've added value and we are still adding value. We've added value and we are still adding value. Subscribe to us, like us, James Associates. We are value to life. We are value to your businesses.